Hey folks, welcome to Quantsapp. Welcome back to yet another video. Today we will understand the impact of days to expiry on our option premium, like how as we move ahead in the expiry curve, how exactly our option premiums are affected, how our option trading strategies are getting affected by the passage of days, by the days left to the expiry, something what we will understand. So what we'll do is first we will understand the impact, how exactly the days left to expiry affect our option trading strategy, and then we will understand how can we go ahead and fix if something is going wrong in our option trading strategy. So let's quickly understand the impact first, like how passage of days affects our option strategy. So for that, let me just take you to option calculator tool in the application. So here it is. Option calculator is free tool, and I would say someone who is getting started should start using this tool because this tool will help you in understanding the option premiums better. Like how any change in variable affects your option premium, you can understand it here. See, a lot of people go ahead and trade options randomly just by knowing the market. If the market goes up, the call is going to go up. If the market goes down, the put is going to go up. So basically, just by having that knowledge, people are trading out there in options. But talking about options, they are sensitive to a lot of other variables rather than just the underlying price. So come to option calculator, just play around and just see what is affecting your option premium and how much. And that too, over here, you don't need to go ahead and buy any subscription. This is an essential tool, so it is free for everybody, the option calculator analytic. So let's say, so now what is this? So symbol, self-explanatory. Futures price, what the price is right now. Expiry, for what expiry you want to calculate the option premium. For what strike price you want to calculate the option premium. For what date you want to calculate the option premium. So I'm saying I want to see what will be the option premium by Monday, which is 3rd of July, if volatility is 10%. That is just it calculated.
Hey traders, Quantsapp has simplified option trading analytics for you. Click the link in the description box below, complete your sign up process and access the most advanced option analytical tools in the entire industry. Thank you.
Now the premium of call would be, if this is the scenario, what it is trying to say, that if this is the scenario, then the call would be quoting around 65 rupees and the put would be quoting around 73 rupees. Now, what we are interested in today is in this, which is the theta. What is this? Theta is the time decay of option. How much your option premium is going to get decayed due to passage of time. The more you move ahead in the expiry curve, you will see the theta impact getting adverse. Okay, so theta is nothing but how much premium will the time take away if you hold that option for one more day. If this option, if you hold it till, let's say, till 4th of July, this will be down by 11.55 rupees and this will be also down by 11.55 rupees. Okay, so this should typically quote around 54. Okay, 53, 54 is something what this should quote around, and this should quote somewhere around 61, 62 if I hold this for one more day from here. So let's see. So now what I'm asking the analytic, evaluate the option premium considering same conditions, but I am holding this option till 4th July. Okay, that means I want to move ahead on the expiry curve. When I evaluated on 3rd of July, there were 1, 2, 3 days left to expiry. When I am evaluating it on 4th of July, there are 2 days left to the expiry, which is 5th and 6th. Just hit calculate, you will get the result. See, 52 and somewhere around 60. So that's basically theta. Theta is nothing but it's how much premium will decay if you hold that option for one more day. Now, if you see how much the theta is now, the theta is 14, minus 14. Obviously, the theta figure will always be negative because each and every passing day, some premium has to get reduced, decayed. It is because of theta. So over here, you are seeing 14 rupees theta decay on the call side and roughly same around the put side. What does that mean? That means if you hold it till 5th, then 14 rupees would be minus. Now, if you see what is the theta decay now, it's 19, almost 20. Now, did you observe any change? The first theta that you saw, the first theta decay on Monday that you saw was 11. Then the theta decay was, let's say, minus 11. Then it was roughly around minus 14. And then it was roughly around minus 20. So versus this is nothing but theta decay, what I have plotted randomly. Okay, I'll show you how you can actually study the theta curve, but this is what I have randomly plotted. Okay, this is how typically it will look like. Over here, there are 3 days left to expiry. Okay, 3 DTE. So the theta was 11. Over here, 14 days to expiry. Sorry, 14 is the theta decay when there were 2 days left to expiry. On 1 day left to expiry, the theta decay is 20. So what we learn from here is that the theta decay, it keeps on increasing its pace as we move closer towards the days to expiry. Less the number of days to expiry, more the theta decays. Okay, as we move closer to the expiry day, the theta decay, it will start to pick up the pace. Now, just to show you about Architect tool in the application, so just search for Architect panel. What is Architect? Architect is a very interesting option trading strategy builder. Any strategy you have in your mind, you want to make sure that if this strategy will make you money, or at what level will it make you money, so you can come to Architect and you can just give inputs about strategy. Let's say I want to buy a 19,200 strike price call option. Now simple, it is trying to show us on what various levels of Nifty how much profit or loss you would make in this entire option trading strategy. Now it is also showing us break even. So over here break even is 19,192 and the expiry break even is 19,277. That means Nifty has to cross above this level, only then you will make money in this option trading strategy. This is T plus N break even. Now let's say if I move this day slider to 3 days, just if I want to see what would be my break even if I hold this entire strategy for 3 days. So it's saying me that the break even would be 19,234. Now, if I just show you something interesting, just check this. Okay, so this is what I was talking about. So this is theta curve basically. It's trying to show you that if the market remains where it is 6 days from here, you will lose 26 rupees from the option strategy. If you hold it till 1 day left to the expiry, you will lose around 2,400 if the market remains where it is in this option trading strategy. So what we conclude is that as we move closer to the expiry date, the theta will start picking up the pace and it will at some times become unbearable, right? If the market does not give any movement, this strategy will not make any sense. Why? Because the theta will kill your premium so much that you won't be able to make money in the market. So how can we actually act on that? So it's very simple. What I'll do is I'll convert this strategy into a bull call spread. So I am paying theta for 19,200, but on the other hand, to offset the theta loss, I am selling a 19,400 strike price call option. But 19,200 theta will be higher, but the 19,400 strike price call option, the theta would be it would be smaller, right? It would not completely offset, it would not give you profit, but at least it will try to reduce the loss. So let me just show you now. Let's say Greeks, so these are positional Greeks. So the theta decay is 334 rupees absolute. So this is multiplying the theta decay into the lot size. And let's say I am converting this into a bull call spread. See, the theta has gone down to 162, which is huge drop in theta. First I was paying 330 rupees to be in the option strategy. Now I'm just paying 162 rupees to be in that option strategy. Now what is the crux? Crux is simple. Whenever you are heading closer towards the expiry, you convert your strategies into spreads, bull spreads, bear put spreads. So you can do the same thing with put option as well. Simple, you buy at the money or in the money put option and sell out of the money put option. That's it. That will create a bearish strategy using put options. What is benefit of doing this? By first benefit is your break even gets a bit closer. Second thing, you are not paying huge theta decay. Third thing, this strategies, the best part is they are not giving you undefined loss. So do check out Architect and Option Calculator tool in the application from link in the description box below. First, understand the theta decay, understand the other variables, and then analyze your option trading strategies in Option Architect tool in Quantsapp.